Ladies and gentlemen, Joshua Salvetti, welcome back to another lesson of the High Performance Trader. Right, so today I really want to break down and exactly flesh out what it is we're doing and why we use these critical levels the way we do. Right, so a lot of the time you're going to see the critical levels, right, the previous day high, low, open, close. You're going to see them be respected. But what I want to break down in this lesson today is it's not all about them being respected. Sometimes, actually, most of the time, when they are disrespected or invalidated, you're actually getting a much stronger signal to go either bearish or bullish, right? So before we go any further, guys, click the links below if you want to get involved with the team. High Performance Trader offers over 16 different mini courses breaking down market concepts, market strategies, trading metrics, how to log, recreate your trades in a consistent fashion, and market philosophy, right? So we're building an extremely effective team that's been doing extremely well. I'm very proud of the team. Everyone's putting in work. Everyone's starting to see results. But most importantly, it's validating our strategy. It's validating our mentality and our state of mind, and that it's actually working, right? So, guys, if you want to get involved, click the links below. We offer over 15 different mini courses, online Discord, Discord platform where we call out trades on SPY, SPX, QQQ, and futures, right? So, without any further ado, back to the lesson. So the day I want to talk about over here is 10/17/2023, right? So every day in the Discord, we break down a bearish and bullish market scenario, right? I do this because I am I believe intensely that we do not ever predict market our price action, right? Our goal is to react to it. Our goal is to understand who's in control and trade based off that information, right? It's not our goal to be right. It's not our objective to predict what's going to happen, right? In reality, that is the worst way to trade, because when you actually are predicting what's happening and then it goes your way, you get lucky. Now you're programming your mind to actually think you can do it. So now you're associating a winning trade with a predicted trade, and now that's your objective every single day. And every time you're trying to predict, you are not objective, you are subjective, right? Meaning you're not in the present moment. You're actually you're trying to look for something instead of just taking in market information, right? So guys, very important to never predict price action, right? I'm sure you guys can understand this or know this, but that is why every single day we go through a bullish and bearish scenario. So over here, let me find it. Okay, so 10/17 SPY bullish scenario. Looking to keep it extremely simple today. If buyers can show up and defend previous day low and hold structure, I'm looking for long plays targeting the gap fill above. First target end of day 43604. Second target 43697, which was previous day high, right? Critical level to critical level. And now third target closing the gap all the way up to 438. Right? So let's bring that back. So the market looks something like this pre-market. We had previous day low over here at 43358. We have end of day over here at 43603. Previous day high over here at 43697, right? So you guys, I'm sure you guys understand by now why I use critical levels the way I do. But if this is your first time ever watching me, basically what they are the four most critical levels of a daily time frame candlestick, right? The previous day high, previous day low, the end of day or the closing print, and then the open we take off the 930 candle. So during pre-market, we are just looking at the previous three. So once again, the reason why we do this is these areas hold high levels of volume. So based on what happens in these levels, right, smart money is going to be showing their hand, right? The banks, whoever controls these levels is trying to control the day, right? Because in a bullish scenario, price is going to come up, break end of day, break previous day high, and then go further. In a bearish scenario, sellers are going to defend end of day, sellers are going to defend previous day low, and then drop down, right? So very simple strategy, and that's how we trade it. So our goal, once again, is to remain in the present moment and to be able to identify who's controlling which level and then put on a higher probability trade based on that information, right? So that's pretty much how it works in a nutshell. This was our bullish scenario on SPY. Okay, so the purpose of this lesson is to help you guys understand what to do when a critical level gets invalidated, right? So how this worked is we opened up below previous day low. So this is extremely bearish if you ask me. We get a clean break and a retest off this level, right? This is where I first took the market short, and I am targeting this pre-market level. So this was my first target. From 433.59 all the way to 431.32. You guys see where I got these levels, right? I just literally pulled them from previous price action. Actually, this could have been my first target as well, right? So I'm always using previous price action for my targets, right? Because if there's a buyer here and I'm short, I'm looking to see if that buyer shows back up. Same with here. If there's a buyer here and I'm short, I'm looking to see if he shows back up. Okay, so now price bounces right off that and invalidates the break and retest to the downside. So this is what I call bearish market conditions, okay? Once again, our job is to identify and adapt to market conditions. So this is what I call bearish market conditions. We're opening below previous day low. We're coming up for the retest, and sellers are defending it. This is exactly when you want to take the market short. And then you continuously take her short as you break through these levels. Once again, trading with the overall trend of the market. So we take the trade short. We're up about 60%. This is about $1 move, $1.25, and then the market reverses. So I'm constantly moving my stop loss down to protect profits, right? So what that does is when something like this happens and rips through my stop, I'm out of the trade. Done. Profits taken. I'm not deciding to get out. I'm not thinking about getting out. No, out of the trade, right? Like done, gone. I don't trust myself to make those decisions. I want this to be as automated as possible, meaning if I'm in a short play, I'm going to keep bumping my stop down to lock in profits, because what will happen is this volume will come in, these buyers will come in, and you think you're in the best trade of your life, and you've just now went from being up 60% to now down 40%, right? So you must use hard stops to protect your capital. It is vital to becoming consistent. But we invalidate bearish market conditions here, right? Once again, these are extremely bearish conditions. Breaking through that, invalidating the whole break and retest to the downside, is telling us in live time that buyers are here to take control of the day. This is what we call the fake out. This is what we call large money, just accumulating all that liquidity before previous day low, right? Because once again, they need people to take the other end of their buy orders, right? For every buyer, there must be a seller. This is a zero-sum game, right? One winner, one loser. So that is exactly what smart money, that's the whole psychological aspect behind the auction in this scenario. But guys, this is one of my most favorite plays, because once I am now stopped out of the trade and see this on the market, this is when I then identify a great place to take the market long, targeting that bullish scenario that we went through on the pre-market plan, right? Now, once again, let's bring it up. I said, SPY, bullish scenario, looking to keep it extremely simple. If buyers can show up and defend previous day low and hold structure, I'm looking for longs targeting the gap fill above. This is buyers defending previous day low. And you see that retest right there? That's holding structure. We break, we retest, we rip, right? And then we're literally just grabbing targets from previous price action, and we rip all the way up into end of day. Now, there was no reason to get out of this trade here. So once again, if I'm entering based on structure, I'm exiting based on structure as well. Structure is the way you understand the current price action. It's how you understand present moment price, right? Present moment price action is structure, break of structure, structure holding, etc., right? So once again, previous day low, this blue line, we just went short, took a short, buyer showed up, boom, ripped right through it, came down for a quick retest, take the market short, long, targeting this blue line, which is end of day, and then targeting previous day high, which is 437.16. So once we rip up in the end of day, we're still holding bullish structure, meaning we're still making higher highs and higher lows. Boom, right up in the previous day high. So if you guys are struggling with holding trades, if you're struggling with entries, exits, like stuff like that, always use structure. It is critical, right? And not only that, guys, play your levels, critical level, previous day low to previous day high, right? The market imbalance happens daily, and you just need to know how to play it, right? So that pretty much wraps it up for today's lesson, guys. Listen, identify your levels, and when they get invalidated, right, understand who is doing it and trade with them. I'm Joshua Salvetti. Like and subscribe for more content. I'll see you in the next video.